In early 2021, something strange happened to the stock market. GameStop and AMC, two struggling companies, saw their stock prices skyrocket in a matter of days, defying all expectations. But what actually happened? In this video, we'll take a deeper look into the events that led to this rollercoaster that followed. The story begins with a subreddit called Wall Street Bets, a place for amateur traders to share tips and strategies for investing in the stock market, although these days, it's merely considered satire. In late January 2021, its members turned their attention to GameStop, a video game retailer that had been struggling for years. GameStop's stock had been heavily shorted by institutional investors and hedge funds, who were betting their money that the value of the company would follow a trend and continue to decline. But things took a different turn when Wall Street Bets members saw an opportunity and bought the stock in mass, creating what people in finance call a short squeeze. To truly understand what caused these dramatic events, let's first ask, what is a short squeeze? Essentially, a short squeeze happens when investors who have bet against a stock are forced to buy it back at a higher price in order to cover their losses. This buying pressure can drive up the stock price and create loops, which can result in high gains for the early investors and huge losses for those that bet against the stock. Wall Street Bets members use their collective forces and spread the messages throughout social media platforms like Reddit, Twitter, and Discord to coordinate their buying and hold the line against those who were shorting the stock. As the movement gained pace, GameStop's stock price reached a peak of over $400 a share, but this didn't stop people from buying and holding. Notable members of Wall Street Bets such as Keith Gill, known by the Reddit username DeepFuckingValue, who was basically considered as the overlord of Wall Street Bets after purchasing around $53,000 in call options on GameStop stock in 2019, saw their positions rise exponentially, with Gill's portfolio being valued at $48 million by January 27, 2021. For context, this is a stock that at the start of the month was valued at less than $20. Although the stock prices continued to remain higher than anticipated, the buying frenzy soon sparked controversy and raised questions about the power of retail investors. Trading platforms such as Robinhood began restricting trading of stocks like GameStop, AMC, and others on January 28th, and customers could no longer open up new positions in the stock, although they could still close them. As of January 29th, Robinhood was still imposing limits on the trading of GameStop, AMC, and BlackBerry stocks. Then on January 30th, they increased the restrictions from the sale of 13 securities to 50, including companies such as Rolls-Royce Holdings and Starbucks Corporation. They gradually increased their limits over the following days, but by February 2nd, many thought that it was too late and the damage had already been done. The events also caught the attention of regulators who launched investigations into potential market manipulation and collusion. Congressional hearings were held to examine the roles of social media and the democratization of finance and investing. GameStop shares lost 60% of their value on February the 2nd, closing below $100 for the first time in a week. Reports estimated that about $27 billion in value had been erased. Other assets affected by the short squeeze and put under company trading restrictions, such as AMC and BlackBerry shares, also declined in value, and things continued to look bleak throughout the week. Despite the dramatic fall in price, many Wall Street Bets members continued to hold onto their shares to send a message, even if it meant they would suffer significant, life-changing losses. On February 24, 2021, GameStop's stock price doubled in heavy trading volume, with the stock halting twice before closing at $91.70, a 104% gain. The surge came a day after the announcement of the CFO's resignation to accelerate GameStop's transformation. On March 8, 2021, the stock continued to rise by 41% to $194.50, with around 25% of the stocks being shorted. The following day, the stock surged to its highest point since January, resulting in a market capitalization of over $17 billion. Shares closed at $246.90 and increased a further 3% in after-hours trading. Then, on the morning of March 10th, the stock rose as high as $348.50 before being paused for volatility, and then dropping 40% by 12:30 p.m. to the previous day's close. On March 24, 2021, the GameStop stock price fell 34% to $120.34 per share after earnings were released, and the company announced plans for issuing a new secondary stock offering worth up to $1 billion. By this point, short interests had dropped to 15%, compared to the 141% level at its peak in January, and on March 25, 2021, the stock rose 53% from its previous day's decline of 34%. The GameStop and AMC stock market events have highlighted the power of retail investors and the potential for social media to disrupt traditional financial systems. They've also raised questions about the regulation of stock markets and the democratization of finance. Only time will tell what the long-term consequences of these events will be. One thing's for sure though, the world of finance will never be the same again. Oh, and somebody out there made a lot of money from their forgotten GameStop shares Grandpa gifted them back in '93.